Hello everybody, welcome again, and we will continue with capital gains tax now. I want you to open chapter number 17 of your lecture notes, as I will share the screen with you as well, and we will quickly go through the chapter number 17. I assume that you have already read this chapter, so you know what I am talking about. So I will quickly go through everything. I will tell you the bits and pieces about that. Wherever I think that it is difficult or you may not know it, I will try to explain it. Alright, if you still have any questions, you can always post on YouTube if you have subscribed to our YouTube channel, which you should, I think. Right then, so as you can see on your screen, page number 58, it says notification of liability to income tax and capital gains tax. So we know as individual we have to pay capital gains tax, and we might have to pay so we have to pay income tax, and we might have to pay capital gains tax as well. What happens is that HMRC normally sends you a notice about that, about notification about tax liability. So if they does not send you any notification, you don't have to just sit at home and keep silent. If you don't receive any notification from HMRC, you have to tell to HMRC that I haven't received any notification of tax liability, so please send me one. So then they will send you, and then you will have to submit the VAT return. So that's what it says in the notes as well. Individuals who are chargeable to income tax and CGT will receive a notice to file a return from HMRC. An individual who does not receive a notice to file a return is required to give notice of chargeability to an officer of Revenue and Custom within the 6 months period, which is 5th of October 2017 for our current tax year. A submission of tax return, we know at this level that what is tax return. Do you know what the tax return is? Now, tax return simply means it is basically a form which you have to fill, where you will have to write down your sources of income and everything, and how much you are earning, and you'll have to calculate the tax liability, how much you owe, and so you'll have to fill all the information. Now, by what date you have to submit your tax return, it depends on if you are sending it through the post, it is paper based, or if you are doing it online. So obviously if you are doing it online, you can be lazy, but if you're doing it by paper, you have to submit it by 31st of October after the tax year. Or if you have received the notice late, then 3 months after the notice to file the return. For online, for electronic tax return, the date is later of 31st January after the tax year, and 3 months if you have received the file notification late. Keeping of records. You must keep the records of your invoices if you are a businessman, or the pay slips and other sources of income if you have. If you are an employee, you must keep it for 1 year. If you are self-employed, then you must keep it for 5 years. Correction and amendments in tax return. Excuse me. So HMRC has got 9 months. They can make any changes into the tax return, whereas we as an individual, as a taxpayer, have got 12 months. So HMRC has given us 3 months extra so that we can make any changes if we want to in our tax returns. After that, it says compliance check on return. So if HMRC officer want to make a compliance check, they must tell you within the 12 months after the end of tax year. So they will tell you that they want to come to see your tax return, they want to come to see because about your invoices and all that, or pay slips and different things. The next thing is discovery assessment. Now sometimes what happens is that if HMRC officers are suspicious about you, that you have been claiming more relief, or you have been paying less tax, or you have been showing your income less, then they can come to your home and they can inspect your different stuff. Normally they have 4 years, but it can be extended to 20 years if they think that you are a funny man and you are understating your tax liability. It is known as a discovery assessment. On the next page, determination. Now normally what you have to do is you have to submit your tax liability and you have to submit your tax return as well. So when you are submitting your tax return, that's fine. If you are not submitting your tax return, then HMRC will write you, it will remind you that you should submit your tax return. If you still ignore it, then what HMRC does is they will assign a tax officer, and they will ask to fulfill your tax return. They will ask to fill your tax return on your behalf. So if I am an HMRC, say for example tax person, so HMRC says to me that is Mr. A. Mr. A hasn't submitted their tax return, so could you please fill his tax return on his behalf. Now I, as an officer, I don't know what the sources of income Mr. A has. So what I will do is I will just take the form. I will say, so £10,000 income tax, £20,000 capital gains tax, £50,000 corporation tax. So whatever the figure comes in my mind, I can write whatever I want to. So it's always better that don't drag it. If HMRC is doing determination, you are in trouble, right? So determination simply means that HMRC will make up their own figures, and they will write down your tax return, and then you will have to pay tax liability on that. So then the next thing is appeals. Now it is different for direct taxes and indirect taxes. For indirect taxes, you can go to tribunals directly, whereas for direct taxes, you'll have to write to HMRC, and they will give you a caseworker, and they will give you the decision. If you're not agreed to that, then you can go to a tribunal, and there are two types of tribunals. One is a first tier tribunal, which deals with normal cases, the small cases. Complex cases are dealt with upper tier tribunal, upper tribunal. And first you have to go to first tier tribunal. If you are not satisfied, you can go to upper tribunal. Normally it is fine, you don't have to go further than that. But if you are not satisfied with the upper tier tribunal, then you can write to Court of Appeal as well. It is up to you. Tax evasion and avoidance. Tax avoidance is legal, you know that, and tax evasion is illegal. So when I say legal, it means using exemptions and using your accountant effectively. It is legal. And when I say illegal, there are different ways you can do that. You can avoid the tax, you can evade the tax, sorry. A penalty on dishonest conduct of a tax agent. Please make sure you mark it as important. It is very, very important. I don't know, what shall I say? If you look at 90% of past exam papers, a 5-mark question is always on this portion. 90% or even 95% of past exam paper has got 5-mark question about this portion. So it is basically about ethics. So just read this portion and mark it as very, very important. Most of the time students get this 5-mark question on this portion. So basically what it is that you might have to pay penalty of up to £50,000 if you are not honest in your tax dealings. If you're advising your client in money laundering, or you're helping them or whatever, so you could face a £50,000 penalty. Now what can you do when you know that your client is not doing well, he's just playing up, and they don't want to pay the tax? So what you have to do is you will have to write to them that please make sure do not do that, because it is not right. Just write to HMRC that you have to pay this much liability. If you do not want to do that, let us do that on your behalf. We will write to HMRC that you owe this amount to HMRC. Then if the client agrees, that's fine. If client says no, I don't want to, then please let them know the consequences of that. And if they are still not agreed, and if you think that this problem is going to be very, very huge, then you can write to money laundering officer. If you are working in a company, you will have money laundering reporting officer in that company. If you don't want to, if you don't have any the money laundering reporting officer in your own company, then you can write to National Crime Agency, right? So there are different options available to you, but anyway, so what basically means that eventual way to deal with that client will be that you will write to the client that, all right, okay, we are not going to act on your behalf, and we are writing to HMRC as well that we are not acting on your behalf. Although we'll let HMRC know that we are not acting on your behalf, but we won't tell HMRC about the reasons why we are ceasing to be your accountant or tax advisor, right? So that is the way to write. And you will, if you look at the past papers, on 9 out of 10 past papers you will get this 5 mark portion, and it is very, very easy. There are 3 marks. So if you just read this one, you only need 45 marks to pass the exam. Now obviously it won't be exactly the same way, it will be a little bit different. So but basically it is going to be on ethics, right? So if you come to the next page, page 60, payment of income tax and capital gains tax. Now normally income tax is paid in 3 installments. So 2 are payment on account, and the final is going to be balancing payment. So when I'm, during the tax year, so our tax year runs from 6th of April to 5th of April. Our current tax year is from 6th of April 2016 to 5th of April 2017. Now just before the year end, 31st January 2017, for our current tax year, 31st January 2017, I will have to pay 1 payment, right? Now it is during the tax year. Hang on, how can I pay tax during the tax year when I don't know what my tax liability going to be? Yeah, what happens is that I will have to pay according to my previous year's tax liability. So whatever 50% of my previous year's tax liability is, I will have to take 50% of that, and I will pay on 31st January during the tax year. The second payment I will pay 31st July after the tax year, as it says on your notes as well. Now that will be second payment on account. So that will be 50% of previous year's tax liability as well. Now after that, another 31st January, the next 31st January, that is going to be final balancing payment. Now when it's a final balancing payment, it is by that time we will know the tax liability of this year. So what we do is we'll take the tax liability of this year less whatever we have paid so far. The balancing amount is going to be either recoverable, or if we have overpaid, or it is going to be payable to HMRC, which is going to be balancing payment. Now you don't have to, you might have national insurance as well from the previous year. So whatever the income tax, national insurance is going to be, we'll have to pay 50% of that. Now as it says on your notes. Now you can read it yourself anyway, so I won't go through all of that again. Interest on late paid tax, you know what the official rate of interest is. It is 3%, and we will have to pay interest on that if we have been late. Interest on balancing payment is a little higher. It depends on how late are you. It is going to be 5%, 10%, or 15%. If it is up to 5 months late, it is going to be 5%. If it is between 5 and 11 months, it is going to be 10%. And if it is more than 11%, it is going to be 15%. Now, repayment of overpaid tax and repayment supplement. Now the interest which HMRC charge from us is 3%, whereas if we have overpaid, then the HMRC will pay us interest, and they will pay the principal amount as well. But the interest which they will pay us is not 3%, is 0.5%, 0.5%. Right? It's unfair, isn't it? They're charging 3% from us, and they're giving 5%, not 0.5% to us. It's not fair at all. Right then, on page 61, please. Yep, on page 61. The payment of a CGT by installment. Normally, CGT is paid on 31st January. Usually, the CGT is paid by 31st January after the tax year. But CGT may be paid by installment if the consideration is received over a period in excess of 18 months. So what happens is, if I have sold an asset, but the payment of that asset will be paid to me in installments, which is in excess of 18 months. So in that case, I can pay capital gains tax liability in installment, and that installment could go up to 10 years. Sorry, not 10, 8 years, sorry. I beg your pardon. So so what happens is that, but the CGT paid by installment if consideration on the disposal of the asset is received over a period in excess of 18 months. In such cases, the installment may be paid over the period that consideration is that the consideration is received, up to a maximum of 8 years. The amount of installment must be agreed with HMRC. And CGT may also be paid on installment if the disposal of an asset is by way of gift and gift relief is not available. In that case as well, it can be paid in installment. Right then, you can read it yourself, the remaining portion. Tax return late. If you have submitted the tax return late, it is going to be £100 if you have submitted up to 3 months, and £100 plus £10 per day for up to 90 days, right? So it is going to be £1,000 penalty in the second case, and in the third case, if you have submitted between 6 months and 12 months late, then it is going to be either 5% of tax liability or £300, whichever is greater. If you have submitted the tax return more than 12 months late, then it depends on if you have been careless or you are doing it deliberately. And if you are doing it deliberately, you are concealing it as well. So in the most extreme cases, that you are not doing it deliberately, you are not only doing it deliberately, but you are concealing it as well. In that case, penalty is going to be 100% of tax liability. So you will have to remember these tables because it is very, very important from exam point of view. So if you have been careless, so you did not give enough attention to that, so HMRC is alright, that's fine, we'll give you just 5% of the tax liability penalty or £300, whichever is greater. If HMRC know that you are doing it deliberately, you are doing it on purpose, but you are not concealing it, you are not hiding it, then the penalty is going to be greater of £300 and 70% of tax liability. If HMRC is convinced that you are not only doing it deliberately, but you are hiding it as well, in that case, it is not very, very good. You could face a penalty of £100 of the tax liability. Penalties for errors and late notification. Now you can read it yourself. If it is careless, it is going to be 30% of the potential lost revenue. Now, PLR, what the PLR is? Now, potential lost revenue simply means that how much revenue, how much tax has HMRC lost. So whatever your unpaid, VAT is going to be, not VAT, unpaid tax is going to be, sorry. Whatever your unpaid tax is going to be, that is the amount which is potential lost revenue for HMRC, because it is cost for you, it is tax for you, but it is revenue for HMRC, right? So if you have been careless, it is going to be 30% of the potential lost revenue, and it could go to 100% if you are doing it on purpose and you are concealing it as well, right? Minimum amount of penalties. Now if you can convince HMRC that you have made a disclosure, so you let HMRC know, then you might be paying less tax. Now there are two cases. One is unprompted disclosure and another one is prompted disclosure. Now unprompted disclosure simply means that you are doing something wrong, but you let HMRC know that you did it wrong, right? That is unprompted disclosure. So that HMRC did not know about you doing it wrong, so you tell HMRC first. That is unprompted. The prompted disclosure is that you were not only doing something wrong, but HMRC came to your office and HMRC people caught you red-handed. Now then you are telling HMRC that yeah, I did it wrong. Now if you have been caught red-handed and then you are telling HMRC, that is prompted disclosure. So you have been caught red-handed, and if it is prompted disclosure, then penalty is going to be higher. Excuse me. Bless me. Right. So because it is 50% in the extreme case, but this 50% is still less than deliberate and concealment, because you are not concealing it, you are disclosing it. So that's why it is 50%. Right. Yeah, that is end of our lecture and chapter, I think. We have already done these examples anyway. So, yep. Yeah, we have done it. So only one thing is left on page number, give me 1 second, on page number 53. So only one page is left, and we'll do a couple of questions as well. We'll do a couple of past exam papers relevant to shares, reorganization and takeover, and PPR and letting relief and all that. We will do these in our next lecture, and that will be our last lecture of capital gains tax in the next video. So till then, goodbye, and I will see you later. Thank you.